Welcome, folks. This is Tom O'Brien of TFNN. We're broadcasting live today from beautiful Manhattan at the Hard Asset Show. Our guest today, Mark Bristow. Mark is the CEO of Randgold Resources, trades in the U.S. as GOLD. Mark, welcome back to TFNN.
Thank you, Tom.
Great to have you.
Yeah, it's great to be here.
So, tell us, Randgold Resources. Number one, if you can tell the new listeners where you do business, how you do business.
Tom, we're an African gold miner. We make our business focused in two big areas in Africa, West Africa and Central Africa. And our objective, or strategic objective, is to create value for all stakeholders involved in gold mining, wherever we are, through the discovery and development of world-class gold deposits. We focus on only assets that are more than 3 million ounces, and we look for a 20% internal real rate of return at an $800 gold price at the moment, long-term gold price.
So when we talk about, it's interesting you bring up 3 million ounces. I mean, those are monsters. So your history, you know, it's funny, talk to people, I get 60,000 ounces, 100,000 ounces, 3 million ounces. Those would seem to be very large mines, right?
You can't make money under 3 million ounces in Africa. It's wild, it's got high risk, it's got long supply chains. You have to carry a lot of infrastructure to develop these mines.
Yes.
It's not like downtown Nevada or Western Australia or South Africa even. It's a wild place, Africa, and you need big elephants.
And you're very attuned to it, aren't you?
Yeah, I love it. It's a great place. You make good money. There's great opportunities, but it's also risky, and you've got to be there to manage the risk.
I guess in the mining business, as in the oil business or any other business, you have the risk, of course, finding the asset. Then can you bring the asset out? You know, the last time we did an interview, I thought it was intriguing. There's many different costs that are involved, meaning what it costs to get gold out of the ground. Could you talk a little bit about how Randgold, you know, says I get a cash cost of this, but what is included inside that cash cost?
As you know, I'm not a big supporter of cash cost. I think it's just smoke and mirrors.
Yes.
We look at silos of costs. We have 4 silos that we manage. The first one is discovery cost, and to date, if you take everything that we've spent on discovering gold since we started, it averages out at about $15 a reserve ounce. For the discovery, if you add the Motto transaction, it's $22 a reserve ounce.
Okay.
The second column is total cash cost. That's anything to do with the production of a bar of gold.
Right.
So we even allocate our share options back to those to the mines to put into their total cash costs. We're currently running at just over $600, and the nice thing about Randgold is long term, because of grade, we're going to be around $450 for some 10 years. Then we have, which is important, tax.
Yes.
Because if you make profits, and we're a profitable company, you pay tax. And that's between $75 and $100 an ounce, reserve ounce.
Yes.
And then you have capital.
Right.
And we spend about $100 a reserve ounce of capital. So if you add all that together, that's our business. Very simple. You don't have to go through many
true costs, though, which is
and they are real costs. Yeah.
Right. Yeah, different number. That gets.
And when you subtract that off the gold price, you get your margin. And if you look at your income statement and balance sheet, they should balance.
Yes. That's great education. It absolutely is, especially in any business, but that is an absolute great education, because I think people are still learning the resource business. You know, when I started this only 10 years ago, you know, I've got educated by folks like yourself bringing up, but it's new, you know, commodities are new for people.
Well, you've done well in educating the investors, and they do. You know, John Paulson the other day said, you know, he believes in gold, he believes you should have a significant percentage in your portfolio.
Yes.
But it's a very complex industry with lots of smoke and mirrors.
Yes, absolutely.
And it's got emotion and intrigue and all the other things that lead you one astray, whether you're an operator, investor, or a government.
Right.
So what he did is he went out and got some really good guys to work in his team to help him manage through that challenge.
Sure.
And you know, I think that's always the big challenge when you start investing in gold is how do you invest in, and what do you invest in, for how long? Do you invest to trade, or do you invest
to really make money,
term?
big money?
And,
yeah.
Yeah, that's always the game in any stock, but I think gold brings a little bit more dynamic to the process.
And passion.
Absolutely.
You know, you just brought up a point about the 600, 650 gold ramping up in the next 10 years, bringing it down to 450. Talk to me about that.
Well, you know, one of the things that the industry is short of is quality.
Yes.
And I've been saying for now a couple of years, 3-4 years, that it's ex-growth, our industry. And everyone's been trying to keep their reserves up by increasing the gold price in which they calculate their reserves, which means that you have a lower and lower grade. You know, our industry is just, its average reserve grade is now just over a gram a ton.
Wow. Right.
And more importantly, as you'll see in my presentation today,
yes.
A large part of the industry is over-mining or high grading their assets, which doesn't all go well for long-term unit costs.
And what does high grading mean?
It means if you've got a 2 gram ore body, you're mining it at 4 grams.
I see.
So what you do is you end up with only 1 gram left.
Right.
And as you mine that out, it's more and more difficult to make money. And the industry at a lower and lower grade needs more and more capacity just to produce the same amount of gold.
Yes.
And that's not happening at the moment.
Right.
So we're seeing a decline.
Right.
Randgold is completely the opposite. We're mining at below our reserve grade. We're working towards developing higher grade reserves. Why? Because we invest in them and we make discoveries.
Yes. Yes.
And we replace our ounces we mine. We don't just stretch them out.
Amazing.
So when you look at our costs, you know, I always say to my operators, there's nothing like grade to improve your cash costs.
That's right.
You know, you double the grade, you half the cash costs. Simple.
Yes, exactly.
And we're looking, you know, Lulo is going to move from 2.5 grams to 5 grams over the next 3 quarters. It's going to grow its production by a significant 50%, and it's going to bring its cost down from the sort of 900s to the 450s.
And does that happen because the actual rock gets better, or is it the way
we are developing towards the center of gravity, the main ore body?
I get it.
We've been developing on the fringes up until now.
I see. So I understand what you're saying, that when they really have a 2 gram and they're going for a 4, they're taking the meat out. Yeah. I have it. Unbelievable.
When you take the middle out, you know, the sandwich never tastes as good when you've eaten the
you want the last
ham,
bite
you know?
to be the best. That's right.
It's
That's
like
right.
a cone without ice cream in it.
No doubt. Absolutely.
It's a bit of a setback.
It certainly is. Well, listen, we appreciate the update. You know, great company, great story, and particularly when you put all the costs together, it's just a lot cleaner when folks can take a look at it. Particularly myself, just understanding it.
It's a simple thing. Your life is very simple. When you make business at less than what you can get when you sell it, it's called profits.
That's right.
And we often miss out on that. You know, in our industry, we talk about how much gold and what cash costs and that, but profits are what pay the people. And when you make profits, you pay taxes. When you pay taxes, the governments of the countries one operates in are happy.
You know, you bring up a great point there. And particularly, you know, you're doing business in a lot of tough places. You kick back, you support a lot of places, a lot of those cities.
Absolutely.
And that's pretty neat.
And paying tax contributes to an economy.
Yes.
And, you know, the reason why governments change the rules is because they're not, in their mind, benefiting from a high gold price and the industry that they host in their country. So
exactly.
It's beholden on us to be profitable.
Absolutely. Well, we really appreciate the update. Folks, it's Randgold Resources, trades in the U.S. market, GOLD. Thanks for being here. Have a great day. Have a safe day. We look forward to speaking to you again.